Michael Burry, he is shorting big AI companies. He has puts on Palantir and he has puts on NVIDIA. One thing I did not cover in that video is his other buys. He has bought Molina Healthcare, but a position he had in his second most recent 13F is Lululemon. He went out and bought 50,000 shares of Lululemon, and he has since added 50,000 more shares. So he has doubled his position. Burry is obviously very well known for his big short, but he's also very well known as a value investor. In fact, he was known as a value investor before he was known for the big short. Michael Burry would go out into the market. He would see companies that have value that nobody else thought had value. This is sort of what he did before the big short. And then he obviously had the big short, yada, 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 whatever. And so fundamentally, at least in my personal opinion as well, Michael Burry is a much better value investor than he is a short investor. And so that has me interested. What's going on with Lululemon? I've heard of this company. I know of this company. I know what they sell. I know what they do. I think everybody at this point does. But what makes them such an attractive company? Let's take a look at some of the stuff that's going on at this company. I am pleased with our results we delivered in 2024 and the progress we continue to make towards our enterprise goals. It was another year of growth for our company, steadied by our proven business strategy, commitment to our long-term success, and strong balance sheet. In 2024, we surpassed $10 billion in annual revenue for the first time, driven by growth across our merchandise categories, channels, and markets. Adjusted earnings per share increased 15% year over year, and we ended 2024 with $2 billion in cash and cash equivalents and no debt. That is very interesting. They have a specific growth strategy that they call the Power of 3x2 growth. And so basically, this 2x3 growth strategy is what they've been doing. Since taking the helm in Lululemon in 2018, Calvin McDonald has overseen the period of massive growth. The activewear brand stock has more than tripled since he became CEO, and revenues have exploded from approximately $3 billion a year in 2018 to $10.5 billion just 6 years later. McDonald said he plans to double the business again, basically the power of three. Double men's, double digital, and quadruple international revenue over 5 years. As McDonald proudly pointed out, the company arrived early at all of these targets, so just 4 years later, it released an update. Yeah, they wanted to double their company in 5 years. They did it in 4. And so now they want to do it again. This new plan aims to double the company's revenue from 2022 numbers, which they introduced this 3 years ago, to $12.5 billion by 2026, which is a milestone they're probably going to hit this year. Every single time McDonald does talk about this, and this is very interesting. I can appreciate this in a CEO. You don't see this much, especially with clothing brand CEOs. But he's not wasting time worrying about his other competitors in this race. We've never really had 100% of our guests' wardrobe. I'd love to have that, but the reality is there will always be room in wardrobe for competitors, and there's a lot of share we can take from the global incumbents like Adidas and Nike out there. That I think all of us are benefiting from. Eisen pointed out, Lululemon's new target of $12.5 billion in annual revenue is what Nike brings in 1 3-month period. McDonald's sees 2 wide open paths for Lululemon's continued expansion, new categories, and new global markets. Lulu is currently present in 26 countries with a single-digit market share in many of them, even in the U.S., where Lululemon is a market leader, thinks the country is far from conquered. This was their Q2 earnings. This is Q2 of this year, and it seems like they're on pace. Revenue is up 7%. EPS is down just a little bit. Total comparative sales grew 1%. Women's apparel grew 5%. Men's apparel grew 6%, and accessories and other revenue up 15%. Store and digital revenue is up. Market expansion. International revenue is soaring, up 22%. The actual price change of Lululemon has been quite unfortunate. If you have followed the company, they soared quite a bit during COVID, I believe. So we've seen over the last year. The company started the year at $40 billion and is now halved to $20 billion, despite the fact that revenue is continuing to grow. Now, this being said, we see this here that the company is not necessarily happy with these. They're growing in mid-single digits, which is not great. Which is not exactly what they're looking for. And I think it sort of makes sense, especially with the whole economy. We talked about this earlier, talking about Wendy's and McDonald's, about how we're sort of seeing the sort of contraction of the American economy. And so Lululemon does not make cheap stuff. They make sort of high-end athletic wear. Actually, this makes a lot of sense, right? Apparel is going down, accessories is going up. The cheaper parts of their business are growing faster than their clothing parts of the business, which is the more expensive part. That being said, just 3 years ago, they were only doing $6.2 billion. Now they're doing, trailing 12 months is 10.9. So we'll see sort of at the end of the year where they stand, which like of the $11 billion, if they see sort of a recovery at the end of the year, then you could very well see the company, if they see an extra 10% growth, it would seem as though they're on pace. If they get another 2 more quarters of 7% revenue growth, that'd be an extra 14%. That'd be the $12 billion. It seems as though the company is still on a pretty good trajectory. Total assets stands at $7.6 billion. Current assets or cash is about $4 billion. Well, cash in total is about $2 billion, with inventory being an extra 1.4. And then total non-current liabilities, long-term debt's only 1.3. The entirety of their debt is $1.3 billion in long-term capital lease obligations. Yeah, so basically no debt, which is kind of crazy that this company is able to continue to grow earnings the way they are with basically no debt and tons of cash. Very good to see. They're doing $1 billion in cash flow, so they're doing 20 times free cash flow, about where I like to see 20 times free cash flow. Can sort of see why Michael Burry is interested in this company at the very least. It seems like they are continuing to execute fundamentally on their mission, which is doubling revenue every 5 years, and they're continuing to do it very profitably.